All right, let's turn our attention now to the markets. The JSE closing lower yesterday in line with its international counterparts as a combination of factors weighed on global risk sentiment. The rand also coming under pressure, falling to a one-month low against the dollar as heightened international tensions supported the U.S. currency. Let's speak now to Benguela Global Fund Managers. A senior portfolio manager there is Grant Nader, who joins us now. Grant, good morning to you and thank you very much for your time. Let's begin with the local currency falling by almost 2% to touch that 19 rand to the dollar mark for the first time since October 25 before pulling back slightly. What's driving these currency moves and how long is it going to be that the rand is stuck in this rut?
Yeah, good morning. So I would say definitely a very disappointing move. I think the primary driver of the move we saw yesterday is actually things that are outside of South Africa. It's the rising geopolitical tensions in the Middle East. It's the strong dollar, which was driven by a more hawkish Fed commentary coming out, pushing out the expectations for rate cuts. And these factors strengthening the dollar, which is actually impacting all currencies relative to the dollar. So that's the reason for the move yesterday. But I think the thing to bear in mind is the internal challenges that we have that are well known around the load shedding, around the rail, Transnet, and the elections coming up. That uncertainty has caused us early on in the previous year to weaken significantly already. And so we're sitting on a very low base. We're sitting at quite a low point in terms of the rand's valuation. And in addition to that, you now have macro factors that are playing out and working against us. So it's an unfortunate confluence of bad news. And I don't see the prospects improving in the near term internally. So it's really going to require some sort of improvement in the global outlook and the global narrative to strengthen the rand, to see some meaningful strength in the rand from here.
Yeah, let's talk retail sales. Those numbers expected out later today. Let's talk about what we can expect from that data and what is likely to tell us about the state of the South African economy as of the last quarter of 2023.
Yeah, so it should be a very important read-through into the kind of GDP perception for the expectations for the fourth quarter GDP. If you recall, in October, the retail sales numbers came in quite significantly lower than what was expected. It was a fall of 2.5% versus an expected growth in sales of 1%. So this number becomes even more important in that context because we don't want to see an accelerating downward trend. The market is expecting a fall of about 1.1% year on year in sales, and that is an improvement from October, but it's still negative. We do understand, I think it's clear to all of us, that inflation and a tough economic environment means we have a consumer that is under considerable amount of pressure. We are seeing the fact that it's a November data does form the backbone of an important number because Black Friday falls into that period. And so there is some potential for optimism around, the bargain hunting driving sort of a more, let's say, some extra sales, some sales better than 2022, and hopefully there's a reason to be slightly optimistic there. I think our expectation is for it to come more or less in line and perhaps marginally better. But, I think supported by stabilizing inflation or falling inflation and interest rates that haven't increased for a good number of months now. So we're hoping that consumer is at the margin slightly better than they were before.
Let's talk company news. Shell, it is set to end nearly a century of operations in Nigerian onshore oil and gas. This is after agreeing to sell its subsidiary there. What do you make of this development?
Yeah, it does tell a story of a trend. You're seeing a lot of these, we've seen it for some time, a lot of these Western energy companies exiting some of the harder regions to trade or harder regions to make money, where there's either political risk or operating risk. And so they're selling it. It's not a small deal, $2.4 billion. And what is nice is that it's mostly local participants that they're selling it to. The consortium is 4 locals and 1 Swiss-based investor. So I find that encouraging. And what they're going to do is they're going to be focused on the more profitable offshore ventures. So we're seeing this trend as shareholders are putting more pressure on these global, oil majors. They're focusing and cherry picking what they see as the best assets and exiting the difficult assets. So I think, it's difficult to operate in Africa, but, one doesn't want to see a trend whereby the foreign majors take the easy money and leave the difficult money for those of us left behind. So hopefully there's still some decent value in it for the locals in terms of the opportunity. It does appear to be that way. And so I think it's a reflection of the polarizing global environment as well.
Well, let's conclude with this. For the first time in 13 years, Samsung is not the company that has the largest market share in the smartphone sector. What does that tell us about this company?
It's actually really interesting. So that is a long time to be at the top of the pile, and we've looked at it. We are holders of Apple, and what it looks like is happening here is that Samsung is losing market share to other players, such as Xiaomi and Huawei in China and some of the other global competitors. It's not that Apple is necessarily gaining massive amounts of market share, but they are certainly holding onto and building out. They've got an installed user base of about 1.2 billion users, and it does talk to the loyalty of the Apple user base, and it talks to the importance of the ecosystem that captures them and keeps them embedded in that ecosystem. They keep buying the iPhones because they have the iCloud, the iMusic, they have iTV, they have this one-off, end-to-end ecosystem, and that is something that Samsung lacks because they use the Android operating system, which is of course owned by Google. So they don't have the ability to offer the same integrated ecosystem, and I think that is a fundamental weakness of their offering, and so they are suffering market share losses to cheaper, almost equivalent product makers. So a tough environment for them. I think they're still high quality, but difficult for them to grow against some of the competitive threats out there.
Grant Nader, thank you very much for that markets update. A senior portfolio manager at Benguela Global Fund Managers.